Hey everybody, welcome back to the channel, and today we are going to talk about it. There's a good chance you've heard this term come up in conversation, maybe someone within your sphere has mentioned it, or you've just been following along and reading the real estate news articles and potentially thought to yourself, are current real estate prices potentially hyperinflated? Are they overvalued? Is the cost of purchasing real estate in Ontario, Toronto, Vancouver, or in many other parts of Canada for that matter, is that cost or the prices that buyers are currently paying anywhere near the true value of those properties based on previous indicators? And my honest opinion to that question is yes. To a certain degree, current real estate prices are overinflated or disconnected from statistical value. So in this video, we're going to talk about what indication we have that current real estate prices are inflated or overvalued, the cause of this and who's at fault, my perspective on it if you're a buyer, seller, or investor, and finally, which I hope you watch till the end here, why I'm not contradicting myself to previous videos I've made, and why I am still pro real estate. I'm still helping clients purchase properties and purchase real estate despite the overall situation that we are currently in. Before we dive into it, if you're new here, what's up? My name's Andre. I'm a real estate agent here in Ontario, selling and servicing the North Simcoe regions of Barrie, Innisfil, Angus, and Muskoka. On this channel, we talk about buying, selling, investing tips, market news, and other real estate related content. So make sure to check out some of my other videos if you like this one. Also, drop a comment below and let me know your thoughts on this video. I also want to mention that I strictly am just a realtor and I'm not a distinguished economist, so please take the content in this video for entertainment purposes and do your own research before making any type of decision. So how do we know real estate prices are overinflated to a degree? Well, you don't need to be an analyst to look at the numbers, the stats, and market news to realize that the recent price growth that we've seen in real estate prices is anything beyond the normal. The term hyperinflation is used to describe rapid, excessive, or out of control growth in a certain economy or market. And in Canada, where we've seen minimum wage, the amount of jobs, or even average income remain relatively the same, the prices of properties and real estate has shot up beyond any natural means. And that has resulted in vocabulary such as overvalued, bubble, hyperinflated, unaffordable being thrown around for legitimate reasons. I'm not going to go too far into it. I'm sure you can pass a lot of time reading about it, but based on these factors, the fact that prices just absolutely shot up sky high, whether all other remaining value factors remained steadily constant, it classifies these prices to a degree being overinflated or hyperinflated. So what's the cause of this? Who's at fault here? Who is responsible for the millions, potentially billions of essential losses to new Canadian homeowners? Is it potentially the listing agents that are milking buyers for their money? Is it the greedy sellers? Is it the weak cooperating agents when it comes down to negotiation? Or is it the high paying cash out of town or out of country buyers? Or is it the government that's liable? We can't specifically pinpoint this to one aspect or demographic. There's obviously many factors involved. However, based on the conversations that I've had with other top real estate agents in the Simcoe and GTA region, which I agree with them on this case, there's a very good chance this initial artificial increase in price was largely due to the fault of the buyers, the demand as opposed to the supply. Whether you agree or disagree on the methods, the supply simply took advantage of the situation that the demand gave them. And I know it was frustrating, and it still is frustrating, when $800,000 homes are listed for $499 and their actual value is between $800 to $850, but because they get 25 to 40 offers on presentation day, they end up selling for $900 or $950,000. There's a pretty big consensus that this situation was created by unqualified buyers offering on properties and cooperating agents, which myself were included, that did not have enough expertise or influence in this market to stop them from doing so. Let me quickly try and explain it here so it makes sense. In the beginning stages of 2020 and probably about till March 2021, now it's kind of dying off, what we saw was that properties that we knew were worth much more than they really were being listed for under market value, right? $800,000, $499. A quick look at the comparables would show you that this property is projected to sell for that amount. But when you're working with buyers and buyers that are pre-approved till $550, we saw these properties come up at $499 and we went to go see them. And the general kind of mentality was, you know what, let's just put an offer in and see what happens. I did mention to a client very early on that, hey, this property is probably gonna sell for this amount. Are you willing to come up to that number? If not, then this is out of our range. And I was dropped as an agent really quickly after that. So going forward, I kind of stopped doing that. And when buyers wanted to put in an offer for $550 on a property that's listed for $499, and even though we kind of knew that the projected sale price is probably around $600,000, we did it anyways because it's true. There's always that aspect of you never know what might happen. But what that did is it started to artificially inflate the prices of properties, because properties that were Normally, in a balanced market listed at that price range and expected to sell for this much should only get 2 or 3 offers, 5 maximum, but not 10, 15, 20, 25. A couple properties in Toronto had 60 offers on them. And when there are so many offers, it puts immense pressure on the top 3, the highest paying buyers on top. And the situation that we saw again and again on the listing side is that between 10 offers, 80% of them would not be where we wanted them to be, and only 20% or 2 offers are where the seller actually wanted them to be or on a price point that we were really happy with. But what it did is as more offers came in, it put more pressure on the buyers up top. And we saw in many situations where the first offer was like $750,000 and the closest offer to it, the second offer was like $600,000 or $650,000. And that huge gap was because the buyers up top really wanted that property and they felt the immense pressure from the offers below them. Whereas in a different scenario, say all those buyers didn't put in an offer and this property didn't have 10 or 15 offers, they had like 2 or 3, that pressure would not be there, and there's a very good chance that those buyers would not max out on their price point and be like, yeah, let's pay $750 and actually go to like $625 or $650 or $655. And unfortunately, as this kept happening, prices just kept going up and up and up, because once one seller on the street sold for $650,000, the next seller didn't want to sell for anything less than that. And since that listing would get 10 to 15 offers, it would sell for $670. The next listing didn't want to sell for anything less than that. Again, double-digit offers, and it just kept going up and up and up. And it really just comes down to basic supply and demand. If you are looking to purchase a bicycle and you go and it's just you and the seller, you're not going to pay more for what it's listed for. You're going to probably try and get it for a little bit less because you want the best deal for yourself. But if there's a lineup of people waiting to buy this bicycle, but you really want it because this is the only bicycle within like a 50-mile radius that's for you, then you're gonna feel pressure to pay more than what it's listed for in order to get it. And this conversation or theory comes down to the fact that had there not been a lineup of 50 people for this bicycle, but maybe just 2 or 3, you would not have felt pressure to pay as much as you had to in order to get that bike. And that's kind of where the whole idea of how buyers and potentially just unqualified offers started this artificial price increase on listings and properties, ending up where we are today. Obviously, this has been very beneficial to sellers and homeowners that got in before this price surge started, but it's made it very difficult for buyers, especially first-time home buyers, to get into the real estate market throughout Ontario and Canada. There's a lot more to it. It's quite a long conversation, and hopefully I don't get split in the comments down below, but the general consensus between myself, my opinion, and a lot of other realtors out there is that is how this artificial price increase and overinflation initially started, by all these crazy offers happening on properties when really the majority of them were nowhere near or should not have been on the table on presentation date. But let me know in the comments down below whether you think I'm right or I'm wrong. So here's my perspective on this for buyers, sellers, and investors. Specifically for buyers and investors, I've said it before and I will continue saying it to probably the end of time. Don't wait to buy real estate. Buy real estate and wait. As for sellers, unless you're drastically changing locations, it is essentially a lateral move. Just make sure that you are either transferring equity or you're staying within the realm of home ownership. It is still a good time to downsize, upsize, or move to another location within a certain limit, because you're gonna get a great price for your property, but at the same time, you're probably gonna be paying, well, current prices for your next property. So it evens out to being about a lateral move. Now, why am I suggesting that you still purchase real estate despite the fact that prices are to a degree overinflated? It's for the simple reason that they are still likely to continue increasing over time. And a very similar scenario that we can relate to is 2017, where we also saw some type of overinflation, but 5 years later, I really think we're gonna have the same outcome, where prices are going to be higher than they were back then. There's 3 really important factors to consider that we had in 2017 that we don't have now that will potentially continue driving the price of real estate upwards. And that is the fact that in 2017, building materials were much cheaper. It was much cheaper to build a property than it is in today's current day. On top of that, we had more housing in 2017 than we have now. Obviously, there was developments that happened that are still going to be finished in the next couple of years. However, there's a lot more buyers looking now, and there were looking now in the last couple months than we ever saw in 2017, pushing more of that housing shortage throughout Ontario and in many other parts of Canada. And finally, immigration levels. They're a lot lower than what they used to be. And if those levels get anywhere close to what we had prior to COVID, then that's also going to be a really big driver of real estate prices here in Ontario and Canada. And that's why I'm still pro real estate. That's why I'm still helping buyers and sellers and investors purchase and sell their properties, because in the long term, if you look at many successful real estate investors specifically, you know, what do you want in a home? You want it to give you shelter, you want to have some appreciation, and overall, you want to make it worth your while to live there. No one really purchases items like stocks to be able to sell them at a discount, right? You want to sell them for more than what you bought it for. And successful real estate investors over time just simply say, look to purchase real estate in the long term. Find a home that is going to be suitable for the next 5 to 10 years, because we know, given the factors and given other historical data, that prices are very likely going to continue appreciating over time. And 10 years down the road, they're going to be higher than they are today. Maybe not double like we saw, or a huge jump as we saw recently, but overall higher than they are, and that what your purchase price might be in the next year or two. I know a video or two that I've made in the past might contradict my message or what I'm trying to say here, but I really do believe in this factor. If you are looking in the short term, prices are too high, do not buy. But if you're looking with a long-term strategy in mind, you have to understand and come with terms to the fact that yes, prices are higher than what their value might be today. However, in 5, 10, 15 years, and all the advantages that comes with home ownership and owning where you live as opposed to not, and other alternatives, is much better, and that you should continue to purchase and buy real estate with that long-term strategy in mind. Thank you so much for watching the video. I hope you got some value from it. Every cycle that we now go through going forward is going to be more data that we can look at to predict the future, because COVID really threw a wrench in everything that we knew that was possible and predictable when it comes to real estate market and the real estate prices. So let me know your thoughts in the comments down below. Do you think prices are inflated and the only way to get them back down to their true value is a massive crash? Or do you believe in the fact that in 5, 10, 15 years, the value is going to catch up with the prices and real estate is going to be worth more than it is today? If you are looking to buy, sell, invest, or maybe just want to say hi, my contact information is in the realtor dossier link down below, and I will see you in the next one.